customs is concerned, so the theme has been very simple. There are a lot of changes from a customs tax rate standpoint, if I were to examine this closely. But at the end of the day, the fact is that there is rationalization of exemptions which have taken place, and a couple of slides are about that. We will share the slide deck. This is to say that few exemptions have waned out, but from a theme standpoint, if I were to say it from a theme standpoint, the exemptions which are there have been brought into the tariff. So for most of the goods, there is no impact per se from a duty rate standpoint. But yes, some of the exemptions that is available have waned out. There are 35 plus products where those exemptions have gone away. So that's a study that we will have to do as from an industry standpoint to see whether our products are coming under the clutches of where we have lost out on exemption.
Very happy to see the fraternity joining in. Welcome to the Blue Circle. It's such a big privilege and pleasure to connect with everyone and our distinguished keynote speakers who are handpicked because of the Think input and the rich experience they bring in. And thank you also to our distinguished audience for joining us, most of whom are CEOs, CXOs, and senior leaders. Many of them are our members and are repeat visitors to our webinars. This is very encouraging and motivates us to provide even higher levels of dialogue through the online mode as well. For those of you who are new with us today, Blue Circle is the world's first sector-specific networking app for business leaders that's built in India. We currently focus on 20 sector communities such as e-mobility, healthcare, energy, and many more. We also present socioeconomic insights, which ultimately determine the evolving complexion of the market. Along with our weekly webinar series and our digital publication, you will be happy to know that we have recently launched the first version of the Blue Circle app for leaders, somewhat like the sector-specific LinkedIn for senior leaders, a space to have meaningful conversations, connect with over 10,000 plus like-minded leaders from India and across the globe, house high quality curated content, and access business opportunities across these sectors. Those leaders among you who are interested, please do join us. I will share the link to the app in the chat section, and we'll soon be sending out invitations to a guest post today's discussion. Now, without further ado, I'm pleased to introduce today's keynote speakers. They are Mr. Hitesh Sharma, Partner, National Tax Leader, Lifescience Sector, Ernst & Young, Mr. Suresh Nair, Indirect Tax Partner, Ernst & Young, and Mr. Rahul Kakkad, Director, Ernst & Young. And for today's topic, we will be discussing Decoding Union Budget 2022-2023 and its impact for the life sciences sector. Now, I request Mr. Hitesh Sharma to please begin the session. Thank you.
Yeah, thanks, Gautam. I think to give a perspective, if I give the background to the budget itself, the government had very clearly brought out PLI schemes for API, med devices, and the pharma sector, and in some ways had given a boost to the sector. Coming into the budget, we were all hoping that a lot of focus would be on innovation and infrastructure. Unfortunately, the government chose to keep a little silent on the healthcare specific agenda items in the budget. The way I look at it is maybe primarily for two reasons. In the last year's budget, they had talked about a 64,000 crore infrastructure building program over a 5-year period. And I guess those plans continue because if I look at the budgetary allocation, the healthcare's budget has marginally gone up in the expenditure budget of the government. What they did talk about in the budget were very nominal digital-oriented themes. The first one was rolling out the national digital health ecosystem. That's to create unique health identity for all citizens of the country and provide, therefore, a universal access to health facilities. They also felt that coming out of COVID, mental health is a big issue, and therefore they have initiated a tele-mental health program where network of 23 mental health centers of excellence would be set up to provide counseling and care services. In addition, if I were to kind of link in other initiatives which could help pharma, the one or two which are relevant is the government's talk about the sunrise sectors. where pharma is part of the sunrise sector, and therefore at least the R&D initiatives can get promoted through that element. And hopefully the light touch and the blended finance that the government is planning to make available to the sunrise sector should help the pharma sector. I think with this, we will dive into the direct tax sections, and I'll ask my colleague Rahul to take them up. Rahul, over to you.
Thanks, Hitesh, and good evening, everyone. So from a direct tax standpoint, I think, no major change in the tax rates. I think while people were expecting, at least the individual tax rates to get tweaked, to increase the disposable income. However, disappointment at that end, only some minor tweaks on the surcharge on the applicable long-term rates. There are certain COVID-related measures which were announced probably in June last year, which probably was given effect to in the budget itself on exemptions, on compensations received on death of a family member, and so on and so forth. Broadly, what also another theme that we saw was in the budget was around, a lot of rulings which were overturned, or Supreme Court, High Court rulings were overturned by the FM. And one such ruling and probably one such issue was pertaining, very relevant to the sector, was around payments made by the pharma life science sector to healthcare practitioners. It was already a vexed issue. However, if you see the memorandum, there are 10-page note on why this should be further disallowed. So a specific explanation is brought in to disallow such expenditure made by pharmaceutical companies or life science companies when it comes to payments to healthcare practitioners. So this would have a lot of impact for the sector. One would need to see now in terms of what happens to the past years and all the litigation which is pending. Obviously, the amendment is effective 1st April 2021 onwards. So it will also have an impact on your current year's advanced tax payments as well. So there's a point for probably everyone to go back and see what are their internal SOPs, policies, what kind of documentations are we maintaining when it comes to such payments, and its impact on our P&L as well going forward. So that's probably, I think, from a sector standpoint, I think this is one of the biggest change which has come in and which will impact us on a going forward basis. Similarly, or also a provision has also been brought in which talks about a TDS obligation on the payer on making such payments also around a benefit or perquisite for the recipient. So, so language which has been used under 37(1), a similar language is brought under 194R, which is under the TDS. So what it entails, it is around in terms of if as a company we are giving any benefit or a perquisite to a third party or a doctor, and the section is quite wide enough, and it goes beyond healthcare practitioners or doctors as well. We as payers are now obligated to deduct TDS on those payments as well. So, however, the section is quite broad, quite vague. What is benefit, what is perquisite has not been defined. How do one value such perquisites or benefits? That's also not determined or not. There is no clarity on it. And also, how do one go about internal procedures, change in ERP systems? A lot of changes will have to be done, right? Because it also doesn't give us relief if TDS has already been done under another section. We are still obligated to do TDS under 194R. So this is probably, given these two changes together, which will have a significant impact on our business and our operations on a day-to-day basis. A certain relief for the manufacturing sector, the due date for to avail the concessional regime has been extended from the sunset clause of 31st March 23 to 24. So that's a welcome move. Certain benefits for the startup regime and the startup community as well. Now the startup world have another year to set up and avail profit link exemption. So that's also another welcome move. 14A deductions. There are, this is another area where there were rulings which were conflicting, and just to overturn that, to say now 14A disallowances would be applicable irrespective of whether we have earned exempt income in that year or not. So that's another area where a Supreme Court ruling has been overturned. This is another ruling where people were claiming the education cess part of our income tax as a deduction basis rulings of Bombay High Court of Sesa Goa and Chambal Fertilizers. However, the government has clarified that the intention was always to include surcharge and cess as part of the income tax amount, and hence it should not be allowed as a deduction. And they have made this as a retroactive amendment from 2005-06 onwards. So this will have a huge impact on assessees who would have claimed this as a deduction. There could be interest tax outflow in their payments as well. Penalty prosecution probably could be defended given there were rulings of High Court and Supreme Courts available. Certain procedural changes in section 206, it talks about, when last year the provision was brought in, a specified person was defined, and as a payer, you were responsible to deduct TDS at a higher rate if the specified person has not filed returns for the past 2 years. They have made it more stringent and restricted only if the previous year return is not filed, then as a payer, I'm obligated to deduct tax at a higher rate. Certain benefits for filing an updated return in a scenario where an assessee or an individual, you have failed to report a particular source of income or probably not computed in a particular manner or in a correct manner. Now you can file an updated return within 2 years from the end of the assessment year, subject to certain conditions. Also, there is, you need to pay up to additional 25% or 50% as the case may be, depending upon when you tend to file your updated returns. To reduce multiplicity of appeals before high courts, if there is a favorable order before a particular court or a tribunal, the department have now been obligated not to file an appeal before the higher forums, just to avoid litigation on those grounds. Certain administrative difficulties were faced in a reorg scenario, and this again a change is done to overturn a Supreme Court ruling. People were taking arguments that in a merger scenario, certain notices on the predecessor entity are not valid on the successor. Just to ensure that the revenue's interest is protected, an amendment has been brought in to say that the successor is liable for any notices or order on the predecessor, and those notices, etc., will not be bad in law anymore. Also, a provision has been brought in to allow successor company to file an updated return within 6 months after receiving the court order as well. So that facility currently is not available, but however, that has also been brought in.
Let's move to indirect tax now.
Sure.
Yeah. Thank you, Rahul. So as far as customs is concerned, so the theme has been very simple. There are a lot of changes from a customs tax rate standpoint, if I were to examine this closely. But at the end of the day, the fact is that there is rationalization of exemptions which have taken place, and a couple of slides are about that. We will share the slide deck. This is to say that few exemptions have waned out, but from a theme standpoint, if I were to say it from a theme standpoint, the exemptions which are there have been brought into the tariff. So for most of the goods, there is no impact per se from a duty rate standpoint. But yes, some of the exemptions that is available have waned out. There are 35 plus products where those exemptions have gone away. So that's a study that we will have to do as from an industry standpoint to see whether our products are coming under the clutches of where we have lost out on exemption. Rahul, we move ahead. So I'm just mindful of the Q&A as well. So yeah, this theme continues. As I said, there are products which have got some exemptions, so some categories which have got exemptions, some which have lost out on exemptions. Patient assist program, where which was of immense benefit to the patients. Some of these are sought to be moved out from the exemption list from 1st April 2023. And I strongly advocate, the fact that we should represent wherever applicable to the department to try and protect some of these exemptions. Yeah, Rahul, we go ahead. Yes, and on the custom side, maybe one thing which again it could be more of academic interest. The Directorate of Revenue Intelligence, a very premier investigation body, consequent to canon decision of the Supreme Court, had lost its power to issue show cause notice. It was not deemed to be a proper officer, and Justice Bobde Saab was on the bench when it was ruled. It was a big hit to DRI. They had faced a similar issue in the past in Syed Ali matter way back in 2011. And even then the law was corrected to give back the power. Even now they have done the same thing in this particular budget to give the power back. So that will be interesting to see how it unfolds, because there would be companies who will take this particular matter again to the court. So that's something that we will have to look at. Advance ruling is something which is again probably not so a welcome move, because the way advance ruling used to work out is that if you get a ruling, it is to remain applicable throughout the tenure where the facts remain the same. But they seek to change this now and say that the advance ruling will be applicable only for 3 years going forward. So that's something which may not be seen as positive, but that's something that we'll have to wait and watch if there is any change that comes in. And there is heavy dependence on technology. The import of goods at concessional rate of duty, which is to be done manually, will now be done digitally. And they have also brought this provision that in case there is data which is there with the customs, the importers' data, exporters' data, if they get published in the public domain, then Customs Act empowers the department to treat it as an offense and penalize such publishers. Can we go ahead, Rahul? Yeah, we go down to GST, and GST, I would rather put it in this way. All of these are proposed changes, and it will take some time to come. It will not get into play when the finance bill becomes the Finance Act. Okay, but for one change which is on the interest side, rest of the things will take time because each of the states also have to look at it. But the big picture that we are talking about is that given the success, given the way the department has approached the input tax credit, they want to tighten the screws. Okay, so they've sort of brought in or they propose to bring in changes which will require digital intervention, and not just 100% matching of GSTR to be sort of envisaged right now. They have gone beyond that, and they are saying that going forward, the auto-generated document itself will give indications on whether you will be able to get credit or you will not be able to get credit, or you may not be able to get credit. And they have laid down in which case those aspects will come into play, which means even if our vendor has not availed correct credit or taken excess credit, that could impact my ability to take credit as well. So it's going beyond. There is, and obviously this will depend upon a lot of how GSTN is able to wire the system, but looks like this is going to be a tough time. And the way I see this basis, my experience on how the journey of GST has been, unless we get digitally wired and we get very strong in this particular area, it could be one area of concern. One positive part is there is a relaxation of time. We have time up to October of 20th of October to take our credits for the last fiscal year. That has been extended by almost a month to 30th of November, which is there. Later, the other changes that we are talking about nature, but the idea is to, again, as I said, tighten the screws, not allow. And this is all around the case where they've been very successful in identifying, bogus credits, and therefore how do you sort of identify them using digital analytics, and how do you ensure that these fly-by-night operators do not cannot carry this forward. We can go ahead. Yeah, so other again, as I said, all these amendments are largely procedural in nature, which is that we'll be sharing this deck, and happy to take any questions. Yeah.
Done. Thank you. So I will start with the questions we received. First question is, Union Budget 2022 outlined genomics and pharmaceuticals as a sunrise opportunities eligible for a supportive framework to build domestic capacities and promote R&D. What does it mean for the startups and SMEs working in these areas? What more could have been done?
See, the way the government has only talked about sunrise sector, where they will introduce supportive policies, light touch regulations, facilitative actions to build domestic capabilities and try and promote thematic funds. They haven't really articulated beyond that. Clearly, and this is not just the genomics and pharma area alone that the government has talked about Sunrise. There are various other sectors also which are covered under Sunrise. So one has to look at fine prints of what comes out when the policy gets actually outlined in greater detail. This is an announcement. Typically, it takes another month to 3 months for these policies to actually crystallize into actual kind of wired documents, and then we know exactly what is identified for each sector, or is it kept open and they will identify who they will support and in what manner. What more could have been done, frankly, I think, and it's linked to, I think, your later questions also. Innovation as a theme, we thought needed a lot more, and innovation for us includes research and development. We thought it should have got a lot more focus in the budget, whether it is, direct tax incentives, which were available earlier, like 200% reduction of the R&D spend, or even if the government wants to take it beyond, let's say like they have the production linked scheme, should there be something like a research linked incentives that the government should consider? Now, some of these like PLI and others can come beyond the budget, right? So I think we should continue engaging with the government with our thoughts, with what we think helps the sector become quite robust, and try and see how we can engage the government to get the right perspectives out.
Great, thank you. I'll move on to the next question. That's the funding for COVID-19 vaccine development in the last budget resulted in unprecedented success. Taking it as a lesson, why hasn't the government hiked the R&D spending by research institutes and academia at this time?
So, when we try and make something which was, which the government didn't have a choice, right? It wasn't business as usual. Let's be honest about it, right? They had to cater to the needs of vaccine development, and therefore the collaboration. And it wasn't just Indian government, right? It was governments all over the world who are trying to collaborate and work together to find out solutions and look at how it can be provided access across the world, right? So those are unique instances, and one shouldn't kind of mirror those in actual life. The reality is the government can only do so much, and they do have DSIR and other schemes where they do promote research and development, including in the pharma area. There is a government spend that is identified every year that they do spend, whether it is MSMEs or others. There is initiatives that they continue doing on areas that they feel are relevant for the country. But the way we look at it is innovation has to be really done more as a private and academia collaboration. Government should be a facilitator. They should create policies which help rather than fluster things. And that is the role that they should play. And one shouldn't get carried away with what happened during COVID times, is my thinking. The reality is that those were different, or those are, we are still living in that world. It is still a different world. We are still trying to get back to normalcy. Hopefully, let's see how soon we can get back to full normalcy.
Thank you. So I'll move on to the next one. The emphasis on digital interventions via the national digital health ecosystem expected to bring massive change in healthcare. Will it be able to address the issue of insurance coverage on digital health / telemedicine?
Firstly, what is the digital intervention that the government is looking at it? They're really looking at health records, right? Something similar to like what we have as Aadhaar, to put it in very simple terms. Okay, it is far more sophisticated. With that, hopefully the expectation is that the treatment is far more specific to an individual, because the genomics and the health records of each individuals are accessible to a doctor when they actually look at what has to be prescribed. So the government is really moving on that theme when it comes to digital. Yes, the mental health or the other are more the immediate requirements that they are trying to facilitate. So it's a much broader agenda. The telemedicine, telehealth are areas which continue to happen in many ways. And there are many private, public-private partnerships which exist, or private alone initiatives which exist. And those will continue to flourish. I don't think there is anything that the government is trying to stifle that. In fact, hopefully with better policies or regulations that may become even more conducive. But yes, the focus is more of the government and the larger ecosystem, and then to build the infrastructure at the district level of at least providing the basic necessities.
Sure, thank you. That was very good. Wasn't it? So I'll move on to the next one. Wasn't it disappointing that the spending on healthcare expenditure found no mention in the presentation of Union Budget? Why is the government shying away from increasing the budget allocation for the healthcare sector? That is long overdue.
So, there are three, four elements in this. Firstly, at a fundamental level, the healthcare expenditure has gone up. It was budgeted at something like 80,000, a little over 80,000 crores. The revised estimate for the current year has gone up to 85,000 crores, and the government has actually estimated 86,000 crores in the coming budget. Mind you, last year they made a big announcement on health because there was almost a 35,000 crore vaccine cost that the government had budgeted. In fact, that went up to 39,000 crores in their revised estimate. And if I look at it, they merged sanitization and everything and talked about it as almost a 2 lakh crore government program that they are running along with the infrastructure initiatives. The reality in some ways is the COVID vaccine expenditure in the next year's budget has come down to 5,000 crores. Why? Let's not debate whether, and there are enough talk in the public domain that it should now move to business as usual. Let the vaccine manufacturers provide it to the healthcare and through that to the patients at large. Now, whether the patients use the government program of insurance to take it, or whether it becomes a state subject, because health at the end of the day is a state subject, right? So whether states start providing their own specific incentives, or it becomes, like we said, an open market initiative. So if you take the vaccine bit out, it's not that the government hasn't continued the health thing, but yes, what we were all expecting, and that is where I think the crux of the question was, yes, it is disappointing because we were all hoping that coming out of a pandemic, the government would actually try to make the innovation and the infrastructure far more robust. Yes, they had done PLI. We are all aware of that. And to some extent, that should give some robustness to the manufacturing sector. But the innovation and the healthcare infrastructure are the two areas that we believe the government should still focus on. And as I mentioned earlier, I think we should continue engaging with the government because in my view, a lot of things get done outside the budget itself, right? So one should look at, is there an avenue for the government to reallocate some of the funds and provide more focus on these areas?
True. Very well said. Thank you. I'll move on to the next question. This is more on the tax side. Doesn't the lack of any major changes in tax rates and just a few minor changes in tax subcharges dampen the spirits of the industry, which finds them unsatisfactory?
At a fundamental level, if you look at it, the industry's biggest ask was related to innovation. Frankly, if I look at bulk of the things which we did pre the budget as recommendations, that was the biggest area. And we all acknowledge that the government has not done anything on that. But Rahul, do you want to add on to that?
No, I think overall, from an expectation standpoint, I think the least that would have done was a minor tweak in reduction. So with the rates overall being already rationalize, at least for the corporates, and as individual levels, I think they have been quite clear on, they brought in a separate tax regime for someone who wants to not adopt for deductions and so on and so forth. So at least only a minor tweak on the deduction was the expectation. But I think somewhere, I think they've tried to push it, give reliefs more in terms of supports through these COVID related expenditure, which the employees were doing and so on and so forth. So overall, I think only one expectation, which was from an individual tax perspective, which probably didn't come through. So I think overall they need to manage, their inflows and outflows as well. So.
And I think the larger framework that we should keep in mind is that the government is clear with their intent that they will phase out exemptions and incentives over a period of time. So we have to continue engaging what are the areas which are most relevant, for example, like innovation, and why that are areas where incentives or exemption should still continue till the country does not achieve self-sufficiency in generating new molecules for the country.
They have supported probably the new age startups, as well as, they extended the benefits for new manufacturing setups in line with the whole PLI schemes. So obviously there were changes to support, Make in India and new age startups as well. So I think that's probably the direction in which they want to move in.
Sure. Thank you. I'll move on to the next one. So it's a two-part question. How would the new announcements / amendments in the previous Supreme Court order in the Union Budget 2022 check the malpractices in pharma marketing? Way forward on the implementation of such guidelines that prevent the payments made by the pharma life sciences sector to healthcare practitioners?
Rahul, you want to take that?
Sure. So I think so there are high court rulings currently, and Supreme Court ruling on MCI is currently there was a hearing which happened, I think somewhere in September, October. The ruling is currently awaited. Having said that, I think the judgment still date have spoken about that MCI per se is not applicable to pharma companies, and it's only applicable to healthcare practitioners or doctors. So that argument to an extent will still continue going forward. However, now with a specific inclusion in the explanation in the tax provisions, one would have to now defend themselves at before the authorities, because especially at the lower levels or probably the first level appellate, it's going to be quite difficult to get something in the assessee's favor, because their tendencies are typically to disallow such expenditure. So now the whole onus will be on the taxpayer to ensure that their internal SOPs and guidelines are in line with MCI, and any payments that they make are not in contrary or not in with MCI. So that's probably one relevant part. Second, also to have in place to substantiate that, right? Because eventually it is more of a documentation based assessment that typically our judicial systems follow, that wherein we'll have to prove to the authorities that these expenditures are in line with law and not against law. So I think that's probably relevant going forward basis. A lot of emphasis will be there on documentation, internal policies and controls.
Sure. So I think we have one more question there, and I'll just take about 5 more minutes of your time. The question is, has the Union Budget 2022 failed to address India's continued dependence on imports for APIs and bulk drugs, a huge challenge for the pharma industry?
Yeah, so Gautam, like I said, a lot of this was done pre the budget itself. The first PLI scheme, which focused on APIs and med devices, actually focused on what the government identified as 53 APIs, which are most crucial for the country. and they came out with the PLI scheme to try and build that infrastructure, right? The second scheme was looking at, again, APIs and formulations to try and see how the overall robustness can be done. So in some ways, they had tried to address part of it earlier. I don't think any of these schemes can address everything. The reality is that we need to do a lot more to catch up. And those are things that we need to continue engaging with the government. But I'll ask Suresh if he wants to add on, since he's the expert on this topic. Suresh, over to you.
No, I think Hitesh, you have addressed the issue. PLI did want to, and the concept of PLI, at least the phase 1, was very clear to reduce the dependency from the API import standpoint. Phase 2 has also been very successful. The 2.0, as they call it, it has been successful. So when we look at that theme, I think that theme is sort of addressed or will get addressed over a period of time. Did we find anything in the customs, act related changes or from a GST related? Largely it would have been customs only to address the question. The answer is no, because then if you have to reduce the dependency, what does it effectively mean? It effectively means that we should be capable of production, of producing those goods. That's what PLI wants to do. And the second bit is that you whatever exemptions are there, you try and do away with it. So if as I started that conversation, if our members recollect, I said that there have been changes, exemptions have gone away, and the theme is very clear. This is the third year in the row where the exercise is that exemption should go away. So 350 plus exemptions have gone away in this budget. And what does that effectively mean? That the theme is remove exemptions on items which can be manufactured in India, provide concessional duties on raw materials which get into manufacture of either intermediate goods or finished goods. So some of these things are there, obviously not visible, obviously does not kill the issue right away. And I think it would be work in progress, if I could put it that way.
Great. So thank you very much. If there are no more questions, I just want to say such an insightful and engaging session, Mr. Sharma, Mr. Kakkad, and Mr. Nair. Our guest and I have been hooked on to the very end and have taken home several nuggets. And thank you to our leaders in the audience for joining us and for staying till the end and for always asking excellent questions.
Thanks everyone.
Thank you.
Thank you.
Thank you. Bye-bye.
All the best.
Have a nice weekend. Bye-bye.
Thank you. Bye.